All right, it's go time here. It's about that time of day again here, folks. Welcome back. Welcome back. It's Thursday evening. It's February the 21st, 2019. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help traders of all shapes and sizes earn consistent, reliable, dependable, predictable profits using a simple three-step trading strategy that we teach and trade together every morning alongside our clients in our trade room. But my job tonight is to identify the most reliable trading opportunities, setting up for tomorrow, Friday's trading session. And we got crude oil, S&P, Nasdaq, gold, and euro on the topics for tonight. I'm going to start off this evening by grabbing that crude chart in the upper left-hand corner. Crude is basically a range-bound market right now with a slight bear bias. Anytime I have a range-bound market, I want to buy low, I want to sell high, and because, of course, we have that bearish tone to the market right now, I'm trying to sell high as my top priority for tomorrow. The hard part, though, is if we do get this market to go up above the high of that range, we've got a problem here, that rising support trend line. Now, that rising support trend line brings up a great topic that we're going to talk a lot about tonight on this video, and that is planning your exits before you plan your entry, or understanding where your exit will be to make it easier to plot or plan what entry pattern will be the best to get into that trade. So with that rising support trend line, I have to be careful. And because of that rising support, I'm really looking for one specific pattern to sell off that high in the battle zone tomorrow morning. We're going to grab that oil chart and dig in here in just a moment. Over on the S&P tonight, the S&P is very much a range-bound market. Got that big pendulum swing off the high, collapsing all the way back down to those lows. We get a beautiful 1 and 2 try for those sellers. We're breaking back above this trend line. Remember, anytime I have a range-bound market, I want to buy low and sell high. The hard part right now is this is one hell of a bearish market move off of that high, and anytime I have a lot of bearish momentum and I want to be a buyer, there's one particular pattern I'm always looking for. You might know the answer. If you don't know the answer, make sure you stay tuned, because we're going to talk about how to buy off of this low going right back up into that trading range. Stay tuned on that if you're an S&P trader. Over on the Nasdaq looks at first glance a lot like the S&P. We're range bound, we're bearish, but there's two big differences. One is the trend line. That one's pretty easy to see, but there's one even more important difference between the Nasdaq and the S&P. The S&P is ready to go back up to retest the high with the right pattern, but I think that Nasdaq may have one more shot lower before we start digging out of this basement down here and back up to retest those pre-market highs. I'm going to break this down on the Nasdaq because I'm really waiting to see what happens on that next leg lower. If we get the next leg lower, I'm looking for two different scenarios, either to buy it back up or sell it as it pummels, right? Those buyers going lower. Nasdaq, we'll take a deeper look at that in just a moment. Over here on the gold tonight, gold is pretty straightforward. It is nothing but a bear trading range here tonight. Trading a trend here tonight. With that bearish trend, I always know I want to use the trend as my friend, use those channels, and of course the measured move, right, is always on my radar. The channel's pretty easy. I'm looking for a way to sell up at the top of that channel. That should be pretty easy. I've got a couple patterns we'll look for to sell up inside that battle zone, but the real challenge tomorrow is going to be if this market keeps going lower. As I mentioned earlier, you got to think about where's your exit so you can better plan the entry. So if we don't get that nice pullback to sell high here, what if the market goes lower? We're going to put two of those scenarios together tonight on the gold. That way you're ready no matter what happens on that yellow metal tomorrow. And then, of course, we can't forget about the euro. The euro been bouncing back and forth inside of this trading range. It's a range-bound market. There's that slight bullish bias to it, right? We get that slight bullish tone to it inside that trading range tonight. Trading range tells me buy low, sell high, fade those breakouts. But again, another one of those trend lines coming down overhead. I've got trend lines right above and below right now. Triangles are really, really important clues because they tell me exactly where to get in. And because we have to worry about these trend lines, that tells me exactly, again, plan your exit so you know what entry pattern is going to be most useful. We're going to break down opportunities here to be selling high and buying low and avoiding that middle here on the euro. So we're ready to rock and roll. I've got all the charts all prepped up. I've got a great plan for Friday's trading session. But before we jump into the charts and put this plan together though, I just want to make sure you never miss another great video. And to do that, I would encourage you to join our mailing list. It's really easy to join the mailing list. Just head over to sidewaysmarkets.com. This is our trading blog where all the action happens every day. And right there on the home page, right at the top, you can join our mailing list by giving me your name and your email address and then hit that subscribe now button. Now remember, when you hit that subscribe button, make sure you check your inbox because I'm going to send you a welcome email with lots of goodies to help you maximize our time together on this nightly newsletter. And as I mentioned earlier, we teach and trade the same strategy every morning with our advanced members in our trade room. We open up tomorrow morning at 8 o'clock Eastern time. I'd love to have you there with me. If you can't be there with me tomorrow at 8 o'clock Eastern, not to worry. The next best thing is to download all the charts that I'll be using in tomorrow's trading session. They're available for you right below the video tonight. Just scroll down below that video and you'll see all the charts available for download with a big button below the video. And if you're on the YouTube channel right now, not to worry. There's a link in the description of that YouTube video. Now, speaking of YouTube, if you're on YouTube or if you're here on our blog, if you have any questions, that's what the comment section's for. Use the comment section below the video to drop me some questions, comments, feedback, any constructive criticism. I know I'm a big boy. I always want to improve. So let me know how you would like this newsletter to keep improving every week, right? I'm always trying to find ways to add value for this nightly newsletter. So drop me some comments in the comment section. And while you're down there, give me a thumbs up if you like tonight's video and you want me to keep doing more of these. And then don't forget, if you have any questions, in addition to the comment section, you can always call that toll-free phone number. Use that live support tool in the upper right-hand corner. I'm always standing by to answer your phone calls, right, and answer all your questions. Look forward to speaking with you on the telephone or chatting with you in the comment section below. All right, let's roll up our sleeves. We got tomorrow morning. It's a Friday, finally Friday. Boy, I'll tell you, for being a short week here, there's been a lot going on this week. We had Monday was the holiday, so of course we're still dealing with that holiday shortened week. And as we go into tomorrow's trading session, Friday, the February 22nd, this is the final Friday of the month of February, and oftentimes the last Friday of the month tends to be a more volatile session. So I'm definitely expecting to see some extra volatility in tomorrow's session, which is probably pretty good because we don't have a lot of news on this calendar here right now. You'll notice we get the IFO survey if you're trading in London overnight. That will definitely be something to keep your eyes on if you're in the London session. But other than that, though, we got retail sales in Canada. There's not a lot on the schedule. So we do expect to see increased volatility with this last Friday of the month. If you also look at the US-based calendar tomorrow, a lot of Fed speakers tomorrow, 10 o'clock, 11 o'clock, 1 o'clock. So not a lot of news on the schedule tomorrow, but we're going to hear from a lot of the Fed voters here in the US. And of course, right, we're still waiting to hear more about those US-China trade talks. We've got everybody piled into the conference room at the White House right now, right? Tomorrow, I believe we've got Premier Lee, right? And of course, President Trump. I believe the big guns are coming in to negotiate tomorrow. Maybe we get a little bit of surprise towards the end of the day tomorrow, hearing about those U.S.-China trade talks. I would say that's kind of the big elephant in the room tomorrow. Friday, last Friday of the session, I do expect to see increased volatility because of that. No major news. Maybe we hear something about those trade talks tomorrow. And as always, on a Friday morning, early in, early out. Like I always say, you got to have a really good reason to be trading after 11:15, 11:30 on a Friday morning. So early in, early out. And of course, we're going to put this plan together tonight, and we'll trade the plan together tomorrow morning, starting off at 8 o'clock Eastern time. All right, let's jump right in. Speaking of the plan tonight, let's take a look at what we have here on the charts here for this evening. I'm going to start off here tonight on the oil market. Looking at oil here, first of all, this evening, we've basically got two main components. One is the overall bearishness of this market, right? A bear momentum in the trend tells me I want to sell at resistance, right? One of my favorite ways to find resistance, second big component here, is that trading range. I'll take that trading range, I'll copy and paste it down to create support. I'll copy and paste it up to create resistance. So this area of resistance overhead around 57.30 is definitely going to be on my radar tomorrow. And then of course, another level of resistance I'm watching is this hidden channel. If I line up these lows, mark up those lows, right? Most people try to find resistance by drawing resistance trend lines. My trick has always been find resistance by looking for support trend lines and then copy and paste them up, right? And that becomes a level of resistance as well. I call these hidden channels. So we've got three main components. One is the bear market, the bear bias, the bear momentum. That tells me to sell at resistance. I've got levels of resistance waiting here overhead at 17, right? And especially up at that 57.30 area with that range expansion level as we go higher. And then again, I've got that trend line coming down, bring that up. That creates that hidden level of resistance overhead. So three big clues on the chart tonight. That pretty much puts us right up around the top of that channel. And I'm looking to get short up above the high of the range, up near the high of that channel. And of course, to get there, we've got to get a relatively strong push higher. Now, this is always where things get interesting because we've got this rising support trend line. Now, this rising support trend line won't be a big deal if we just keep on rolling lower, and I'll talk more about that in just a moment. But this trend line becomes a real big deal, right, if this market pops higher. I talked about this earlier. We want to plan our exit before we plan our entry. And what that basically means is before I go trying to take this trade here, right, it's probably going to be best if I know where, wrong button there, right, where I want to get out. So if we do get this move going higher here, I've got to be really careful that I don't buy into that rising support. Now, I know most of you guys watch me every evening. What is my favorite pattern when it comes to avoiding selling into support level? Trap patterns, right? So a trap pattern is definitely something I'm watching here. Now, how would that trap set up? There's a couple ways we can do this. What I'd like to see here is I'd like to see us jump up, really give us a nice wide open space to go short, and then 1, 2 with a trap high. That trap pattern, which I call a crown reversal, is my way of allowing the buyers to take it higher. Let those buyers now try once, let those buyers try twice, and then we'll try to sell with that little trap, right? That trap is going to be my way of really almost guaranteeing that I'm selling high enough so I don't have to sell into that rising support trend line. So as we go higher, I'm looking for a trap high using that crown reversal pattern to sell so we're not selling directly into that rising support trend line. Now, at that point, what if we go lower here, right? What if we don't get that move higher for that sell back down, right? What if the market keeps rolling lower? If we keep rolling lower here on the chart, not a lot changes, except now I can use that trend line now as not a support level, but now as a level of resistance. So again, we know the plan if we go up and want to sell back down, but what's the plan if we go lower? If we run lower, now I really want to pay close attention to the top of that range, the top of that channel, and look for a shot here now to sell up around those highs. Now, what would the best pattern be in that situation? Well, in that situation, we've got that trend line coming down. Let's stretch this out a little bit here so we can get this to work a little bit easier for you, right? In that point now, if we go lower here on the chart, I'm looking for the move up. I no longer have to worry about rising support. So now what I can do is I can use that easy combination up, one try, two try, into a failure, into a pullback combination. I'm going to let these buyers try once, let them try twice, look to sell into their failure, and then watch that pullback, because that pullback almost always comes back and gives us another shot to sell off of that high. So think of it this way: if we go lower, not a lot changes. We just got to wait for that market now, right, to make that move back up off of that low. Again, I want to sell at resistance in a bear market. So if we keep going lower, look for the chance to sell up at resistance. And again, I've got a failure pattern, right, and a pullback pattern. Now, the biggest thing we got to worry about here on the oil tomorrow is if it gets stuck inside this range. So if we do get stuck inside the range here, what's the plan if we just start going sideways? Because, you know, it's obviously it's a Friday session. We're in a range right now, so we might just get sucked into that range here. What if we go sideways? What's the plan then? I'm looking for the two-try rule, right? One try, two try, back down in, one try, two try, back up in, right? Let those buyers try once. Let those buyers try twice. Then we'll sell it back into that range. Let those sellers try once. Let those sellers try twice. And we'll buy it back into the range off the low. So if we start going sideways here the next few hours, moving average flattens out, we're not going up, we're not going down, we're going sideways. That's our cue now to respect that trading range, buy those lows, sell those highs, and fade those breakouts. Now, what would a reversal look like? A reversal requires what I call a 1, 2, 3 reversal. And that is a 1, strong move up, 2, a pullback to the moving average, and 3 is a strong break higher. The key to a 1, 2, 3 reversal is to get that strong break off the moving average. Once we get that 1, 2, 3 reversal, then I'll mark up the original high, mark up my new channel, and I'm looking for the pullback right into that sweet spot, which is the combination of the highest point of the first leg, right, and of course that hidden channel bottom to buy off of that low. So now we have a pretty good idea of the plan here. I'm looking for a trap pattern overhead because I don't want to sell into that rising support. I'm looking for a failure into a pullback pattern to sell off the high if we go lower. If we end up going sideways here, then it turns into two try, right? 1, 2, back down, 1, 2, back up, and then again the 1, 2, 3 reversal, right? If we do get that reversal, fine by me. We're buying the low of that new hidden channel. So traps, reversals, pullbacks, failure patterns, man, there's a lot to learn, and that's exactly why I want to give you a whole lot more information on the entire strategy that we use here at School of Trade. And to do that, I'm going to give you access to a free trading class here at School of Trade. I'll give you the back door inside the members section here at schooloftrade.com so you can learn all the details about my favorite entry patterns and how we use them every day in our trade room. Grab that free course. That little information icon popped up in the upper right-hand corner, or there's a big red button right below the video tonight on our blog. If you're here on the blog at Sideways Markets, hit that big red button below the video, or in the upper right-hand corner, grab that link if you're here on YouTube. All right, oil looks pretty good. How about some S&P? S&P is, well, first of all, it's a range-bound market. That's the most important thing right now about the S&P, right? The S&P is still chopping around inside that range. It got a little bit bloody here today because, of course, we had that big move up above the top of that range, and, of course, that resulted in that pendulum swing all the way down. As you can see, that pendulum swings all the way back to the opposite side, which makes perfect sense, right? The amount of the move above the range is now slamming back lower, right? The amount of the move above that trading range, right, ends up swinging back down now, right, on the opposite side of that trading range. So it is a range-bound market, that is for sure, but the bottom line is we've got a lot of bearish momentum on this chart right now. That is one of the biggest concerns we have, because anytime I see a trading range environment, I want to buy low, I want to sell high. But the problem is right now, the market is very bearish. You'll notice there's a lot of bearishness in this market right now. So how exactly am I going to buy this market with so much bear momentum? one specific pattern comes to mind, and that is the nested two-try failure. You can see a great example of that pattern right here, right? As the market tumbled lower, the bears tried once, the bears tried twice, and there were easy short-term opportunities, right, buying back in. In fact, we were watching that buy this morning on the S&P, right? Unfortunately, didn't get the full run higher here because it looks like those sellers tried once, they got their second, and then now we can get that move going back higher. Bottom line, moral of the story is I want to be a buyer going back into that trading range, but this momentum is way too much right now. So what I want to do is I want to give these sellers a couple swings at this, and if they fail after a couple tries, then we know we can start looking, right, for that opportunity to go back higher. Now, the trend line coming down. This trend line is a really important clue for us because I can use that trend line now as a level of support for that run back up. So I want to buy at a support level, such as that trend line coming down, or such as that prior swing at 70.25. The problem we have right now is that bearish momentum. So what's the best pattern to absorb that momentum? That nested two try, right? Let those bears try once, let those bears try twice, and then once I see those sellers trying once and trying twice, again, think about this for a second. So much bearishness in the market. As we go higher, you're going to see sellers coming in trying to send this market lower again, right? I'm sure there are a lot of traders out there that are looking at this as like a hidden channel. I'm sure there will be people who are trying to sell off of that high, and they may be successful, and we're going to put that plan together as well. But for right now, though, I'm going to try to use that trend line not as resistance right now, but as support. So here is the specific pattern that I'm watching for here right now. I would normally, in a more balanced market, be looking for a failure pattern, right? The 1, the 2, and the back up. The problem is we've got the 1, the 2, and it's a very strong second leg, which means I'm expecting more sellers. So let's let the sellers try once. Let's let them try twice. And the ideal scenario here is to get that second try. 1 try for the bears, 2 try for the bears, right? And get off of that trend line. That would be the dream come true, right? Signed, sealed, and delivered with a big bow on top for those buyers. We call this a nested 2-try failure pattern because, again, it's inside of that second try. So 1 try for the bears, right? 2 try for the bears. That's about as much as those bears will give it. If they can't get those sellers to keep this party going, we're looking for that buy now off of that trend line going higher. Should be a very good trade if we can get it. Now, another thing we oftentimes see is it may not pull all the way back. It may not pull all the way back to that trend line. It may end up going 1, 2, 3 higher. If that's the case now, find that new channel and we'll focus on buying off the low of that channel, okay? So if it does end up jumping, 1, 2, go. If it really jumps higher here now what I'll do is I'll find that new channel, right? I'll mark up that swing and look to buy inside, right, of that sweet spot. Again, though, still make sure those sellers get their 1, their 2 attempts, and then we'll look to buy as we go back up into that trading range. So 2 options here, both of which require the 2-try failure. 1, 2, trap low off of that trend line. The second scenario is 1, 2, jump up, find that new channel, and we're buying off the low of that channel on the way back up into that trading range. Remember, you want to stay out of this trading range if at all possible. So if we do end up back in the range, for example, back in the range here, now you know, right? Don't chase after it. If we end up shooting back inside that range, get down below the moving average, 1, 2, and we'll look for that little micro 2-try, right, to buy this thing back up. Don't try to mess with the middle of that range. If it goes into that range, remember, think about where your exit is going to be and use that to plan your entry, right? The exit's going to be at the top of that range. We don't want to buy high, we want to buy low, and to do that, we'll use that failure for those sellers as it goes back down below the moving average. And And again, I know I'm talking about a lot of different patterns right now, and I'm going to keep on going through my plan here for tomorrow. But if you want a much deeper dive and lay this all thing out, right, this whole blueprint out for you, grab that free course in the upper right-hand corner or that big red button below the video tonight and grab that free course. That way you can learn all the details of how this strategy works. So as the market tries to go higher, that's the plan. What if we collapse lower here? Right? What if this market collapses lower? Well, I'll tell you, if we collapse lower here, there is potential. There could be a bloodbath, right, to finish up this session tomorrow. As you can see, he's looking at this chart right now. We've got a very, very easy run back down if we can break free of this trading range. It doesn't look likely right now, but it is definitely possible. So what would that look like here for us tomorrow? We already know we want to buy off of this low, but what would a reversal look like? A reversal requires the 1, 2, 3 reversal, which means we've got to go 1, 2, 3, right? 1 being a strong move lower, 2 being a pullback to the moving average, right? And 3 being that strong move down. Now, once we get that strong move off the moving average, then I can mark up that low, create resistance. I can mark up a new channel, create resistance. And now I know exactly where I want to be selling. I can sell off the top of that hidden channel, selling off, right, the underbelly of that reversal line. Again, wait for that 1, 2, 3. Be very careful trying to predict a reversal before you get the number 3, right? 1, 2, this could easily now, right? This could easily now right back up and retest, right, that range. So be very careful jumping in too early here right now because you're right at the low of that range, right? And because of that pendulum swing, we know there's major support down here and we don't want to sell into that support. So again, we want to go up 1, 2 and buy off that low, right? Or 1, 2, 3, get that reversal and we're selling off of that high. Again, stay out of the middle. If we end up back inside this range and we start going sideways, focus on selling high and buying low. 1, 2 back in, 1, 2 back in, right? Keep your eyes on that 2 try rule as we go back and forth above and below that range. Again, if the market ends up sitting inside this trading range for a while, it'll balance the momentum. Once it balances that momentum, it's a 1, 2 back in, 1, 2 back in, buy low, sell high, and use that 2 try failure pattern, right, until we see a successful breakout of this trading range. We're looking good there. How about some Nasdaq here for tomorrow? Nasdaq is very similar to the S&P, but I want to point out 2 very significant differences. The first one is you'll notice the Nasdaq has not made a lower low yet. This is a big deal because the lower low completes what I call a major 2 try. If you go back to the S&P, you'll notice how the S&P, right, S&P went lower, made that lower low. Basically, in my world, what that means to me is those sellers were able to sell off that pullback and get their profit target. In other words, the bears got their money, they made their money, and they should be, for the most part, right, fat and happy. Now we look for those bears to try twice just to shift that momentum back in the opposite direction. The Nasdaq, as you'll notice, doesn't have that happening yet. We still have that strong move down. A lot of these sellers are still waiting to get their profit targets down here at that big round number, which is why I said in the introduction, I'm expecting these Nasdaq sellers to give this one more significant try to go lower. There's one more difference though on this chart, and that is this trend line coming down. You'll notice there's one big difference here, right? This trend line, we haven't broken above that trend line yet. Again, if you go back to your S&P chart here real quickly, you'll notice we've now busted above that trend line, which now means we can use that trend line as that level of support to go back up right into that trading range. We don't have that luxury yet on the Nasdaq. It's also important, notice too, that if we do get back above that trend line, we're going to be right inside that middle of the range. And remember, when it comes to a range-bound market, buy low, sell high, but avoid that middle. And so right now, with this Nasdaq being so close to, right, the middle of that trading range, what type of pattern do you think we want to use here? Well, it all depends on, right, do we go higher here first or do we go lower first? Because a lot of that has to do with what happens here in the next few hours. For example, so we know right now we've got a bear momentum, right? Momentum is definitely bearish, but we're at the low of this trading range. Being at the low of this trading range tells me that I want to be a buyer going back to the high of that range. The problem is I don't want to buy into resistance and I don't want to trade the middle. So I've really got to kind of thread the needle here, right? I've really got to be careful on the entry on this trade because I don't want to buy high and I don't want to buy right into that level of resistance. So in my eyes, there's only two patterns I'm waiting for here. One is going to be if the market goes lower. The other will be if the market goes higher. So let's break those two down here right now. And this might end up as a bear market tomorrow, right? Like the S&P, if this thing collapses, this could easily become a bear market. So we'll plan for that as well. So first of all, what if the market goes lower? I would expect these bears to have a little bit more effort left in the tank here, a little more gas in the tank to send this market lower. If they do get that market going lower, this trend line still stays there. It's very much a bear bias to it, which means I've got to get above the trend line with a 1, a 2, and a failure. I'm going to watch for those sellers try once off the trend line, try twice above the trend line, and then looking for that combination of that second try along with that trend line coming down as my key level of support. Now notice how by waiting for the sellers to try once, try twice, I'm accounting for the bearish momentum. I'm also making sure that I get above that trend line. And as an added bonus, right, I'm not trading in the middle of that trading range. Now, speaking of the middle, that brings up the second scenario, right? What if we do jump up into that trading range? Then what do? I don't want to trade in the middle, right? And what happens quite often is if we jump into that middle, you're going to end up seeing us pull back at some point. That will turn into that failure combination, 1, 2, right? 1, 2, and I can now look for that failure into pullback combination. Again, looking for the entry below the range or as close to the low of that range as I can get it. Still trying to use that trend line, right? That trend line will still be active here as a level of support. I'm trying to let the market go up. Don't chase after it as it goes higher. Wait for the market to pull back. Use that 2-try failure pattern I talked about earlier to buy off that low. And then once you get it up off that low, don't chase it. Look for the pullback to finish the move back up to retest the high. So we're talking about a 2-try failure, right, into a pullback pattern. And of course, we already talked about that nested 2-try using that trend line as well. Now, what if we go higher here, right? If we go higher here, what if this thing just jumps, right, and runs higher? Then what do? We look for the same pattern we saw back here. We go up, let the buyers try once, let them try twice, and we'll sell back down again. You can see as it goes up, let the buyers try once, let them try twice, and sell it back down again. Had the same exact pattern on the S&P just before the opening bell this morning. We call those what again? Those are called nested 2-tries. So for example, as we go up, I can look for a 1, 2, a regular, or what I call a major 2-try, or we go up with strength. I want to absorb that momentum, 1, 2, and back down we go. Stay away from the middle, buying low and selling high. Now, how would this market break out? What would a breakout look like? Well, in all reality, there would be two possible breakouts. One breakout going higher and one breakout going lower. The breakout going higher is going to take one hell of a move here. We're going to have to see a strong move up, and then we're going to have to see this market literally hold and break through that high. We're going to have to see a lot of strength as we go higher to find that new channel, and then we can buy off the low of that channel. Be very careful trying to buy into that 7110 area because, as you can see, it's already been proven as a very solid level of overhead resistance. Now, I would rather have that pattern, to be honest with you. I'd rather have it at the downside. What would a breakout of the downside look like? The 1, 2, 3 reversal, or the 1, 2, 3 breakout. 1, strong move down. 2, pullback to the moving average. 3 is that strong move off the moving average. Be very careful trying to predict this failure or this breakout, because a lot of times it'll go right back up, and then that will be right that 1, that 2, and that will set up for that buy coming in off that low. We talked about that already, right? So I don't want to go trying to be too aggressive selling low here, because we've already seen those support levels are there and they're probably going to hold. So I want to make sure I get the 1, the 2, and the 3. Again, that will come right off that moving average. I'm looking for that trend line down, find that hidden channel, and again, we're looking for that sweet spot, using that new 1, 2, 3 reversal, using that breakout, using that reversal line in combination with that hidden channel. And again, hidden channels, reversal lines, all of these different terms I'm using right now, just grab that free trading course in the upper right-hand corner or the big button below the video tonight, and you'll learn all about all those terms. That way you can make the most of our time together every evening on this nightly newsletter. Perfect. So now we've got a good plan for buying, for selling. Remember, it's going to be a little bit of finesse, a little bit of thread in the needle here to be a buyer right now. 1, 2, and up using that trend line. As we go higher, it's the nested, the 1, the 2, and down, or maybe it holds and keeps on rolling. We might hear about the Chinese, right, U.S. data or U.S. trade talks tomorrow. If they find some grand agreement tomorrow, right, this thing could easily tear, right, going higher. If we hear the opposite, though, it could easily crash, right, and go lower. So we will definitely be watching for those breakouts on the Nasdaq. Now, from 2 very difficult charts there on the E-minis over to a relatively easy market here, right over on the gold tonight. Gold's pretty simple. It's a trending environment, and anytime I see a trend, I want to follow the momentum. I want to use channel rotations, and I want to use measured moves. Now, there's measured moves on the chart right now. You'll notice I've got 1, 2, and 3 legs down. The measured move is really important because you want to know your exit to better plan your entry. So let me get these arrows off here. You guys can see where that measured move is now. And then so I know where the target is. I know the measured move is the big target. Okay, well, where's the entry? Where do I want to get in? I want to use a channel. Now, again, I realize that most people will find resistance levels by finding resistance, but I always like to find resistance levels by starting off by finding support trend lines first. Once I have that support trend line drawn in, I can then pop it right overhead here, and you can see how well that support trend line fits off of those highs. That creates what I call a hidden channel. Once I have that hidden channel, I'm going to line up the top of that hidden channel along with that resistance trend line I've got coming down, and that provides a perfect location for me to wait patiently here to look to sell into. So we're a bear market. I want to sell at resistance. I've got 2 levels of resistance waiting overhead. That defines my battle zone. I can also see prior swing, prior swing, prior swing. That also adds another layer of resistance, because I'll tell you right now, anytime you see this much movement in one direction, you can pretty much bank on the fact that sellers are waiting right above all of those highs, knowing that the odds are really good that they could sell high and take this market down to retest that measured move. So I want to sell at that level of resistance, right, for the target down at that measured move. Now, how do we do that, right? What's the plan on that? Well, there's really 3 different patterns I'm waiting for as we go higher. The first thing I think of as we go higher is this will probably be a relatively deep pullback. And anytime we have a deep pullback, we oftentimes see what I call a 2-legged pullback, which is where we go up 1 leg, 2 leg, and then we try to use that now, right, as the underbelly to sell it back down again. I call these 2-legged pullbacks, or the nickname for it, right, in my world is called a 2LP. You can see a very good example of that 2LP, right, looking back in time here, where of course we had that 1, that 2, up and over, right, and back down again. So think about that pattern, right, setting up again tomorrow morning. That's something I'm watching here off of these highs. Another pattern I'm looking for as we go higher, if we don't get a 2-legged pullback, right, if we just get a strong move higher here now, that will likely give the buyers a reason to try to buy that pullback. It's not a bull market though, so hopefully we'll see those buyers try once, try twice, This, of course, will be a trend following adaptation, right? Or adaptation to this two-try failure pattern. As we go higher, let those buyers try to buy that pullback. And once they fail on that pullback, we now know exactly where their stops are. I can sell into their stops as part of a two-try failure. And then, of course, that pullback pattern before we make that run back lower. So again, I've got my two-try failure pattern. I've got my pullback pattern in combination with that two-legged pullback that I talked about before. Now, there's one more setup that I want to look for here. What if this thing just runs, right? What if it just skyrockets as it goes higher here? That's going to be a real big bull run. And anytime I have a big bull run like that, I'm not going to use just a straight two-try failure. I'll use that nested two-try. 1, 2, and then back down. So if we do see this thing run without turning bullish, right? Remember, how do we turn bullish? We turn bullish with a 1, 2, 3 reversal, right? So if we see it run up, pull back to the moving average, and then jump off that moving average, now we have a reversal. We'll mark up the highs, find that new channel, right? And we'll try to buy the low of that channel. The target at that point is right back up to that 13.44.4 area back at today's high of day. What I'm talking about is if it just slices higher, right? Could easily do it. Lots of reasons why gold might spike on this. But while they're trying to hold that pullback and go, let them try once, let them try twice, and sell back down, right, to retest that low. And again, I got my target now, right? Once I see those buyers try once, try twice, I can now sell it back down. Again, measured move now is that final target. So now we've talked about the price goes higher. We also know what the plan is if we get the 1, 2, 3 reversal. What if we go lower here? You know, I got to say, whenever we see a market that moves this much in one session, oftentimes the following day will end as a range. So sometimes, right, when a big move like this happens, the following day, nobody wants to buy it because it's so bearish, and nobody wants to take profit because, right, they're holding on for that measured move. So if we do see this thing start going sideways tomorrow on gold, which definitely could happen, we get a bunch of Fed speakers tomorrow in the U.S. session. Gold may be a little bit paralyzed ahead of that. If we do see it start going sideways, double tops, double bottoms, flat moving average, then we know it's a range. Anytime we have a range, I find my range resistance level overhead, and we use that two-try failure. 1, 2, and then back down again. 1, 2, right, and then back down. We go from there. So not a lot changes, but remember, if we find ourselves with a trading range, you want to find that range resistance level. Again, take the size of that trading range, copy and paste it up. That will give you that range level of resistance. Then it's just a matter of using that level for the two-try failure because we want to let those buyers try once, twice, and then sell right into those stop losses. So that's if we go sideways. If we go lower here, right? If we go lower here, remember, plan your exits so you know where your entries need to be, right? Great example of this on gold right now. If this thing keeps rolling lower, you have to know where you're trying to go. The measured move down there at 1320, at least for now, that is our big objective. So as we go lower, what's my worry? My concern is I don't want to sell into support. So guys, remind me, what's the best pattern if I don't want to sell into support? Traps. You got it. Trap high, failure, and back down, right? Trap pattern. That's the money maker. Whenever we're bearish, but we've got that level of support right below us, that trap high and then back down, right? We can go from there. Very, very easy strategy if the market, right, keeps going lower. So now we've got all the bases covered here on gold. We're ready to rock and roll for tomorrow. What about the euro? The euro is going to be a little bit of a, again, like I said earlier, threading the needle here, anticipating where the exits are going to be so we know where the best entries are going to be. Bottom line is we are bullish here on this euro into that trading range. What does the trading range tell me? Trading range says buy low, sell high, avoid the middle, buy low, sell high, avoid the middle. That's pretty straightforward. With that bullish bias on the chart, we know being a buyer is a little bit more reliable than being a seller, but with the right entry pattern, we can look for, right, all of these. So most important thing right now is this resistance trend line coming down, this support trend line coming up. Because what this ultimately means is that as I go lower and try to be a buyer, I've got to be careful about buying into that resistance. If we go higher and I want to be a seller, I have to worry about that trend line acting as support. So as I zoom in on this, you guys have the basic idea now, right, of what this market is all about. Let's get rid of the measured move arrows. That way you know where that is. The no trade zone right in the middle. This is where things are going to get nasty tomorrow, right, on this euro. As this triangle starts getting narrower and narrower, it usually does get pretty nasty. So just be careful of that. So what's the plan here? The plan would be, let's go far enough down, right? Let's get out of this range far enough here right now, right? Let's go down far enough. Now, if we go lower, what's going to happen is we're going to have another trend line coming down, right? So if we go lower here now, 1, 2 off the trend line, beautiful opportunity here now to buy using that 1, 2 failure pattern. And again, if I can buy off that trend line, I've got all kinds of space, right? All kinds of space for one of that trend line coming down overhead. The real challenge will be if we get one of these, right, up into that range. If that's the case, we've got to reject the idea of buying into that high. And what I always do is I always wait for that kickback, wait for that 1, 2, that failure, and buy it off that low, right? 1, 2. So the thing is, tomorrow, you're going to probably see a couple opportunities where it's going to be very difficult to stay patient and not chase this thing going higher. Most important thing is don't buy high. Make sure we respect that trend line and buy low. And again, anytime I have a range-bound market, I'm always looking for those 2 try failures because they always work the best just outside of those range highs, right, or those range lows. For example, let's say next up, let's say we go running higher here, right? If we run higher, remember there's an overall bull bias to it. So the easiest way to trade this thing short in a bull market is the nested 2 try, the 1, the 2, and back down in. Again, don't forget, you'll learn all about these patterns by taking that free trading class right in the upper right-hand corner or that big red button below the video tonight on the blog at Sideways Markets. Let those buyers try once, let them try twice, and then again, I'm selling as high as I can here now, so I'm not selling into that rising support trend line. What happens a lot of times is we'll see the market jump up, it'll collapse back down, and we'll find ourselves literally right back into that triangle again. If we find ourselves running right into that rising support, what's the best pattern, guys? Traps, right? So look for that trap high, we'll go trap, and then back down from there. You'll be amazed at how many times you'll see these beautiful trap entries just because there's some rising support or there's some falling resistance. So again, what I'm trying to do is I'm trying to buy low, I'm trying to sell high, avoid that middle, avoid buying into those trend lines or selling into those trend lines, and creatively use the failure pattern. Using traps, using 2 try failures, staying out of that middle. Like I said, it's going to be a little bit of thread the needle tomorrow because we get to plan our exits so we know where the best entry is going to be. So again, I want to see us 1, 2, and back up. 1, 2, and back down. But hopefully, right, I mean, honestly, that may not happen tomorrow because we may get stuck, right, inside this range. If we get stuck inside the range, let it try to go lower. Let those bears try twice, once and twice, right, and we'll buy back in. Give yourself that wide open space we need so we're not buying into that falling resistance. Remember, if it goes higher, it's an overall bull market. So focus on those nesteds, right, those 1, 2s, right, 1, 2, and then back down into that trading range. Now, possibility tomorrow for a breakout. What would a breakout pattern look like here? 1, 2, 3, breakout. 1, 2, 3, breakout. Real strong break. 1 is a strong move up. 2 is the pull back to the moving average. 3 is that strong move through. Mark up that high. Mark up the new channel. Find that sweet spot and buy the low, right, of that channel. Very easy pattern. It just takes some patience. Again, make sure you don't try to predict that first pullback. Those first pullbacks almost always fail, right, in a range. Look back here. Big strong move up, pullback fails, back down in. Big strong move up, pullback fails, back down in. We can't trust those strong breakouts, right? So don't trust them. Wait for that proof. Then once you see that proof, then we can buy the pullback from there. Same thing goes to the downside. 1, strong move down. 2, pull back to the moving average. 3, strong move off. Mark up that low. Mark up that channel. And again, you now know where that sweet spot is, and we're selling off the top of that channel. So stay away from that middle, buy those lows, sell those highs, use the failure patterns that I teach inside that free trading class, and don't forget to come join me tomorrow morning in our trade room, right? We open up at 8 o'clock Eastern time with all of our advanced members. The best way to learn and earn as a new professional trader is to grab our beginner, intermediate, and advanced classes. Our beginner, intermediate, and advanced classes are 3 classroom sessions. We'll teach you all the basics of the strategy. And then together, we'll trade the strategy together every morning alongside all of our clients in our trade room. It's the best way to learn and earn every day with us in our trade room. And don't forget, if you want a free pass as a guest, join our trade room as a guest, grab that free trial. I got a free pass for you guys as part of that free trial as well. Don't forget, I'm always here standing by. Call that toll-free phone number if you have any questions. Use that live support tool if you have any questions. Drop me a comment in the comment section if you have any questions as well. Whatever you're comfortable with, right? Whatever is easiest for you. I look forward to helping you every step on this trading journey. And as always, tomorrow morning, 8 o'clock Eastern time, I hope to see you there. If not, we'll come back and do it again. Not tomorrow evening. There's no newsletter on Friday evenings. We'll come back next Monday evening with our next edition of this nightly newsletter. As always, my name is Joseph. Thank you so much for tuning in. Thanks for all the great questions and all the great feedback we got from you guys this week. It is always such a pleasure to be here on your journey to becoming a consistently profitable trader. Now get some rest, and we'll see you guys tomorrow bright and early. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.